Hey guys, this is Momentum Full. Yeah, this is the new experiment which is going to conducted by me. I think. Sorry for I don't have a mic currently now. It is in my hometown, so I have to take it out. I don't want to waste the time, so I'm recording in the open air. So if there is any disturbance, let me know because I have switched off my. There will be some surrounding sounds. I have switched off my fan as well in the room. So. Okay. This is the experiment which is done for myself about momentum investing. Momentum investing is a simple concept where there are multi-factor concepts like absolute momentum, relative momentum, so many technicals in that, and that leads especially a large amount of money. Okay, you cannot at least you need 50,000 to invest in if you want to do momentum investing in stocks, at least you need 50,000 per stock, and you have to choose a minimum 20 stocks, top 20 stocks to perform the momentum investing. Okay, so that only you can get the results. So, and it's not affordable for everyone as well. And I don't want to take so much exposure on the momentum investing, even though I have such knowledge, and even though taking a 10 lakhs is not a good thing. Okay, it's a huge chunk of money for me. Okay, so I looked at the some more concepts where there are some other things out there. Then I came into something called momentum investing by MEBANE farmer. Is the concept is very simple. We'll be buying the asset when it is about 10-month moving average, and we'll be going long on those assets, and we'll be exiting the asset when it closes below the 10-month moving average. Okay. So this is the simple line. There is nothing nonsense behind it. Okay. Buy the asset which is about 10-month moving, everything in the monthly time frame. Rebalances will be done on every month. Okay. If it is closes below monthly time frame. So no weekly, no daily, strictly no daily, weekly, only on monthly time frames. Buy the assets which are above 10-month moving average, close above 10-month moving average, exit the index which then they close below 10-month moving average. Here we are going to consider an index, not a stocks, because if you consider stocks, we need 20 stocks minimum for a momentum portfolio. Then at least a 50,000 chunks should be invested to see and equal weighted. So that involves a large trackings as well. Okay, we have to. Okay, so I'm interested in that. Okay, so there will be circuits as well. You have to manage that. A lot more things on selecting the stocks. Okay, and drawbacks as well, because stocks portfolio will perform more than the index portfolio in the momentum. Okay, so this is a do it yourself momentum investing. Okay, then the universe we are going to take for this is index, and let me see, Nifty mid cap and Nifty small cap and gold. Okay, because here I consider Nifty small cap and mid and small cap 400, because I will provide the link below. There is a video on Momentum Labs, which are the factors you should choose and which index is best for momentum investing. So I choose a Nifty mid and small cap 400 and gold to if the Nifty small and mid cap closes below 10-month moving average, we will be going long on gold when the gold is above 10-month moving average. Both the criteria are same. When the asset is above 10-month moving average, we will be holding it. When it closes below, we will be exiting it, irrespective of the asset. Okay. If both the Nifty mid and small cap 400 on gold, okay, both are below 10-month moving average, we'll be sitting in the cash or we'll be putting in the liquid funds. Liquid cases are there in ETFs. Okay. Okay. So no issues. So this is how they are the strategy in simple words. We'll be buying at above the 10-month moving average, and we will be exiting around here. Okay, exiting when the close is below 10-month moving average. So again, entry based on 10-month moving average. I mean, around this level itself, you could have entered, not this one. Okay, I have marked it around when the closing is above 10-month moving average. This is where you will be entered. Third entry will be marked differently, and this is the current month. There will be an exit in the Nasdaq 100. why I have taken Nasdaq's and something. I'll show the real Nifty also. So don't no issues. Just for an example sake, I have taken because US market has 200 years of data. Okay. So next thing, uh, if for index investing, we have to go for an mutual fund or ETF. I prefer ETF because I can buy at the spot, which means you can buy like a stock at the level. But mutual fund is also good if you have large amount of chunks of money. If I am planning to put only 25K, if someone is putting more than a lakh, then going for a mutual fund is better, I think, because liquidity issues will be there somewhat, and choosing some good liquid ETFs will be challenging for you. But it's not, yeah, for a beginner, if you're a beginner, it will be a little bit challenging for you. And the ETF will have some cash components as well. Let's say if the ETS is trading at 12 rupees and I have only 100 rupees to put, okay. Then the remaining 20 rupees, I have to keep it in cash component, but it is not the case in the mutual fund. You can put it for 120 rupees. You can get allocation in fractionals as well. So if you want to 100% invested, you can go for a mutual fund. If you want to buy at the spot itself, you can go with the ETF. I prefer ETF for easy tracking, nothing beyond it. No, Labata. This is the two videos which is based on this. I have done the experiment. Okay, that's all. Nothing beyond it. Okay, so I'll share the screen. Next, this is the mid. See, Nifty mid cap 150 or Nifty 400, mid and small cap 400, because this is new universe and there is only one ETF is there, Nifty momentum quality, momentum factors. So you can go for Nifty mid cap 150. Okay, so better understanding. Don't copy me if you don't understand anything. Okay. Just for YouTube purpose, I am taking it again, and I got data only from this levels. Okay, see, there is a drawbacks in momentum investing as well. You cannot predict the cash crash. What I'm saying is, like, Corona cash cannot be predicted because it has happened in 2 to 3 weeks of time, right? If you exit around, this cannot be a crash proof model. Okay, so it can save you from the bear markets. Okay, so according to this, there is no entry and you will be exiting. Okay, let me, if I was planning a momentum here, so I'll be taking an entry around this level. Where is this? This is the place where I'll be entering, and yeah, this is the candle I'll be entering, and this this candle will be our entry, and we'll be exiting on this candle itself because it has closed below. There will be some negatives as well for denote it is in red. This is for an entry candle. So this is in green. So this is where we would have taken an entry at the closing of this level, which means this candle will be in after candle closing, you will be entering and we will be exiting around this candle close. So this will be again you will be taking an entry here. I mean this candle after this candle close, and you will be exiting around this candle. So there are fake entries as well, but the thing is, if you are able to capture a big move, you will be catching this move. Here, what is your drawdown? Let me consider. If you have entered here, let me go and dig deep. Let me consider if you have entered here. Okay, opening and closing. Okay, around 5%. Again, if you have entered around this level and exited, would have exited only at this level. You will be exiting only at 0.1% profit only. So The drawdown is very much limited, but if you are able to capture this big move, let me say again, if you consider, if you have again you have to taken an entry here, and your exit will be around this level. Around 60 percentage profits is in hand. In hand, you will be taking it. That too, this is coming from, this is from, I think, the dates will be around 600 days. Yeah, this will be long-term capital gains tax, where around 1.2 lakhs is exempted. This will be, so you, if you sell it after 365 days, will be end up in profits, that too no taxes, coming into no taxes up to 1.25 lakhs. Okay. So this is the strategy. We'll be going long when it is above 10-month moving average. We'll be shorting, not shorting. We'll be exiting when it is below 10-month moving average. So after exiting, what we will do? You can go for gold, XAU, US. I'm taking Forex chart because I don't want to get into. It is internationally traded, so I don't want to stick into Indian charts. Okay. So what we'll do? It is about 10-month moving average. So you can buy this. So I think first of first you got an exit. First of 2025, you got an exit in gold, then exit in Nifty mid cap. Then you would have entered in this one, and you will be profiting around 8% because that is how strategy works. Where Nifty 50, we got an exit around Nifty one mid cap 150, we got an exit around January 1st, 2025. After January 1st, this is January 1st, right? This month closing only we'll be taking. Okay. So this is where we will get rebalanced and you will be around 8% profit. So this is how more. Then, okay, now, okay, this time I'm going to rebalance it with silver, not with gold, only because this is too much extended, I think. So I'm going with gold, I'm going with silver only for this time, exclusively for this time, not beyond, nothing else. Okay. Because I feel silver has more potential to grow. And it is an industrial metal, it is commodity play. So don't I never mind selling when it closes below 10-month moving average. Tomorrow, if something happens, so don't be a nonsense technical analyst. If you are a technical analyst, don't follow this strategy because I am a technical analyst. And I kept my rules very simple. If it is below, you have to exit it. No other second chance. Okay, that is how strategy is. So I will be happy to exit it. Okay, that's all. So simple strategy, and I'll be sharing this is the slides. Slides will be also given for you. See, only on closing basis will be buy about 10-month moving average, simple, and go long on index 10-month moving average. So if you IRB, you can choose any ETF or mutual funds. So for ETF, you can go for indiapassivefunds.com, indiapassivefunds.com, where you can buy in the screener, you can see what is the tracking error of an ETF of gold, silver, and everything, buy which has lowest tracking error and with some good volumes as well. The expense ratio will be more or less, buy with minimum expense ratio. Don't concentrate more on expense ratio. You should have good volumes and less tracking error. Okay. So I'm not asking you to pay very high expense ratio, but negligible expense ratio. Don't stick only with expense ratio and go for very minimum because there is a tracking error. You might lose in this as well, returns as well. And it should have good volumes if you are taking in ETF. If volume is less, then there is no liquidity, then you will be get caught. Okay. See, let me show. See, UTA has only, see, let's say LIC has, LIC has mutual fund has just got around, I thought 200 only, and commodity, let's say index ETF, apply filters. Then I will go for tracking errors. Click on it. Okay. Commodity. Okay. Tracking errors, which are the lowest, you can you'll get low SC, but the trading volume is very, very small, right? You have to choose with some good tracking error, less tracking error, and good trading. See here, the lack tracking error is 0.017. But look at the trading volume is huge, right? You can take these kinds of ETFs to invest. Uh, I'll share the momentum tracker sheet as well. So the strategy, this is the must read sheet with Gopun's friend. This is not a financial recommendation at all. This is, I am not a SEBI registered research analyst, or I'm not giving any financial advice. I am just experimenting my own strategy. So I am not asking you to consider or replicate me. If you want to do, you can do. That is up to your chance. You are going to press the buy button and sell button. I am not responsible for your profits and losses. Okay. This is how we are going to track it. Symbol, which symbol we are buying it, and current market price, how many units I am buying, and what is the price I have invested it, and distance from the 10-month moving average. How many distance it is from the 10-month moving average. No, just this is just a measurement tool. You can use it from the this, and you can. It is 8% from the this one. If it is like so, that is just for a. This is just used to see whether there is any problem when we invest, when it is very much away from the 10-month moving average. Okay, this is not going to add any value at the time. Buy date and sell date, holding period. Okay, and how many cash components I'm holding. Okay, this sheet will be updated when the buy and sell is done. And this is monthly, month on month portfolio value. Instrument, what is the instrument I'm holding this month, and the value of the instrument, and cash component total value, what is the month and year. That's all. Okay, that's all from my side, guys. I think I have done my thing for the first video, and you guys can have and look at it, and you can implement accordingly if you have interest in the momentum portfolio. And this is for completely for an education purpose. Bye from my side.